This is our Forex blog for September 17th, 2013, and I'm happy to say that we've released a new version of software today. When you close and restart the program, it will tell you that there's an auto upgrade, and once you click yes for the auto upgrade, it'll automatically install for you, and the new version is 4.329. There's a couple things improved in here, bug fixes. One of them is the perfect oscillator when used on the currency indexes. Used to occasionally have issues where the moving average would get off and the Bollinger Bands around the perfect oscillator would get off. That's been fixed, and this is one of the main things that I use to trade with the currency indexes. So I was very happy to have that. I'm hitting the plus key to zoom in on this, and we're going to show you how to use the perfect oscillator in combination with our currency indexes to dramatically improve your odds. The second new feature in the software is improvements to our signals. FX trade signals has been enhanced. You'll want to bring up a range chart, right click on the chart and go to add script and go down to FX trade signals, and if you want to have audio alerts for them, put it on. This loads a ton of data. Some people that live outside the US might have issues with using this tool, and if that's the case, I'm sorry. You might have to get a faster ISP, one that has a faster connection to the United States, or get rid of maybe some of your other indicators, or you can bring it up 30 minutes to 2 hours before you trade and leave it run throughout the day. That's what most people do overseas. They just leave our software running for a week. Every Sunday night they reload it and leave it running. There's no reason to bring it up and down each day. And you should be trading on a PC, not a laptop, and have multiple monitors. So we'll wait for this to load the data and have the signals. Okay, it's up now. And one thing that you might want to do to make sure you see all signals is go to the price range and put in a certain amount of padding. This takes however many pips the highest high and lowest low is. Let's say it's 100 pips. It'll add 10 pips, which is 10% of 100. And that way you can see some signals right at the highs and the lows. And it really doesn't affect the chart too much. So you can see today most people are interested in signals. There's 3 buy signals here, and the first 2 really didn't take off, but you probably wouldn't have been stopped out. Eventually it worked. This one worked. And the market really kind of didn't have that much momentum up here, so we didn't buy the pullback, and there wasn't a deep enough pullback to really buy. We have a nice little double top up here, which we spotted. It ran out of steam right at the previous high, and it also happened to be a major resistance area. It's one of our secret resistance areas, but nailed that, and then a pullback to the hourly moving average found the low. Now, for new traders, you can certainly learn how to trade without using our signals. You can put our containment bands on, which I absolutely love, and it shows you what the hourly moving average is. And you can see that's the reason that gave a buy signal right here, and the market went up about 15-20 pips. But for new traders, we have a series of about 75 different patterns. 20 of those 75 are counter trend trades, and 55 of them are trend trades, double tops, double bottoms, fib pullbacks, and so forth. And I spend 3 to 5 hours every day going through these signals, and the ones that just don't seem to perform in real time or historically, I yank, and I also put in a slew of new rules to try to get rid of some of the losses. But this will really help new traders. Alright, so to finish today's Forex blog video, I'm going to show how I use the perfect oscillator. The currency indexes basically show you in a nutshell what each currency is doing, and you can see if, for instance, the dollar's underneath its hourly moving average and broke down way back at 1. You wanted to sell the dollar versus whatever currency is strong. The pound is above its hourly, so if the dollar's getting weaker, and even if the pound goes sideways, you're going to make money buying the pound dollar. Ideally, what you want is one currency going up and the other one falling rapidly. But if you look at this at 130, you're going to see that's exactly what happened. The pound was kind of going sideways, and the dollar broke down a little bit after 1, and this went up from 95 all the way to 35, 40 pip move. The yen was underneath its hourly, and the daily, weekly, monthly trend was down. The euro also was just kind of going sideways above its hourly, above its point of control. So the euro dollar would have been another one to take a trade at around 115. You can see that one also went up 10, 20, 30, 40 or so pips. And what's nice about that is if you miss that original trade, knowing that the dollar's falling and the euro's, has mild strength, you can use, when you see a few hours later a buy signal, you can use the currency index in combination with our signals. These signals at this point do not use the currency index, but a human trader can use them both and improve their odds. I'm going to start showing how I use the perfect oscillator, but in a nutshell, when you have a currency that's trending down like this, you want to get short, especially when it makes too big of a move up, and that can be above the Bollinger Bands. Surrounding the white line in the middle is the moving average of the perfect oscillator, and then around that is the Bollinger Band. And so when a currency goes above its Bollinger Band and then starts to slope back down, it's pulled up too much, and if the trend's down, it's likely to continue. Same thing, you basically could see that here. The first time it actually hit the plus 80 level on the perfect oscillator, which tends to lead to reversals. You saw one other one earlier today, and it nailed the absolute high. There's a reason why we call this the perfect oscillator. And if you look at the euro right here, two times it hit the plus 80 level, two times reversed. So what do? Find a currency that's trend is, let's say, down, wait for it to hit the plus 80 level, or most of the time it's just going to hit the upper Bollinger Bands. And these are great times to sell: 8:30, 9:15, 10:30. And this is the reason why I've gotten rid of my old currency meter type tools, FX Trend Pro, FX Trend Intensity, and I'm exclusively using this when I decide to manually trade and not just run automated systems. So to sell this here, let's find a currency that's likely to go up. Alright, the euro is trending up before and it's pulled back. It's finding support right here. So I would say around this time at 8 o'clock or so, you can certainly look for a sell in the euro. Now, it doesn't always come immediately. Here, coming up to 8 o'clock, we're kind of waiting for the bars to break the previous bar's low. Maybe you got into a trade right here and you had a loss. You got short again right here, and you can see it fell back 15 or so pips. Ideally, you really want to find a currency that has the exact opposite pattern. So let's take a look at some of the other ones. The Swiss. The Swiss is at a likely reversal area. So unfortunately, this one's in a downtrend. If it had shot up and came down to show an extreme like this, it's a much higher probability trade. But we'll take a look at the dollar Swiss at 8 as a potential sell. And you can see what happened. 8 o'clock, dollar Swiss. Dollar's likely to fall. The Swiss is likely to get some kind of a bounce up, and you can see it fell. Now, it's only a 12-pip move, but nonetheless, it did fall. And the probability of this is just very high, and that's one of the reasons why I like it. As you can see, scrolling forward on this chart, the Swiss kind of still went down slightly before going up. However, the dollar fell more than the Swiss fell. Let's look at another currency here that's two of them that are very strong, and we're going to find currencies that are weak. For instance, the Australian here. It's above its hourly. It breaks out right here around 5:30. This one at 3:30, the New Zealand breaks from underneath to above its hourly, and it's going sideways right here. Weekly, monthly trend are very strong. So really, after 3:30, maybe 4, let's try to find a currency on the first list that were weak. Well, the dollar is clearly the weakest. The yen is as well. And so after 3:30 or 4, buying the Australian dollar, as you can see, just absolutely pretty much straight up. The Australian yen also is very likely to, just kind of go straight up as well, which it does. New Zealand dollar, straight up. New Zealand yen, straight up. you know, in this one, basically you would have maybe bought this breakout right here. Sorry, I hit the wrong button here. Your stops underneath here. You might have had a small win here. Breaks out here, small win. Actually, 20, 30 pip win. Buy this below pullback, 20 pip win. And that's how you use it. The currency index helps you find the strongest and weakest currencies and trade with the trend. And if you don't understand this method, then just use our FX trade signals. Wait for a buy and sell signal. You get audio alerts now. You can be around your house, and if you can hear the alerts, you can go back to the computer and put on those trades.